Hey everyone, I'm Charting Man Dan, trader and mentor with the Chart Guys. We're going to check in on the broader market in this video, along with some of our smaller sectors as the markets shape up weekly lower highs and tightening ranges. We know the FOMC is this Wednesday at 2 p.m. Eastern. I'm starting to get interested in the metals on the long side, and cannabis names had dilution news impacting the sector. Let's check it all out. So we got SPY and QQQ technically setting the weekly lower highs by breaking the inside bars from last week bearish, but the bears have to break both the lows of the last 2 weeks for it to be convincing because they're right next to each other. SPY would need to break 441.19, and again, we're at a fork in the road. We either have a cup and handle on the NASDAQ monthly time frame and the S&P 500 monthly time frame, or 3-month lower highs. So here's the possible cup and handle, or 3-month lower highs into a tightening 2024 range. Again, very different scenarios that we're at a fork in the road for. We're going to get information for the rest of the year that is going to dictate the probabilities of which of these two scenarios are most likely. What the bears must see to negate a possible cup and handle is confirm the weekly downtrend. And to confirm the weekly downtrend, we must see a number of things. We must see increasing bear volume. We must see all of our major sectors, QQQ, XLF, XLV, dropping together, or at least not rotating. And I'll show you what rotation looks like as the financial sector remains strong. We need to see Google not hitting 52-week highs like it did today. We need to see Apple losing its weekly support, which it just held. These are things that the bears must prove. Otherwise, another possibility is just a tightening weekly range into October. And then we look for a break later October of that tightening range. Personally, I hope that's what we get, just because that would give us the most clarity. Tightening range breaks bull, probability for the cup and handle increase significantly. Tightening range breaks bear, probability for the lower high and tightening range on the long-term time frame increases significantly. QQQ, same deal. So bear break, but no follow through at the moment. And today was pretty boring. There was some opportunity in the first 2 hours. NVDA, Tesla had a lot of volatility, but there was a period here where QQQ had a 0.2% range for 3 hours and nothing was going on. And if you look at the volume, one of the lowest volume days in a couple of weeks on SPY and QQQ, and that shows us just waiting for the FOMC Wednesday is pretty much what's taking shape. Tomorrow, I'm going to do a live stream publicly, little open house on our YouTube channel, and we're either going to confirm the hourly uptrends for QQQ and SPY to see daily bounces, or the hourly downtrends will remain intact, and we take out the lows of today for the bears to keep their short-term control. But hourly bounced on the morning, lower high set, and now just a question of which of those two scenarios do we get for tomorrow. And we'll watch it happen live. Cannabis space had dilution news. So one of the U.S. operators had dilution news, CCHW, and then CGC had dilution news, and TLRY had a short report come out. MSOS daily consolidation began. Bulls bought that dip. We got an hourly tightening range. So low, hourly lower high set, higher low. Bulls would have to break 904 to confirm the hourly uptrend and to confirm the daily higher low is set. From there, we're going to have to be cautious of a potential daily head and shoulders, but we're only going to worry about that if the bulls are able to confirm that hourly uptrend. If not, we're looking at 808 key daily support, and if we do drop down and break 851, that will further increase the probabilities of a head and shoulders shaping up. So definitely a lot of the wind being taken out of the bulls' sails, and I talked about over the weekend, the bears getting an advantage in terms of headlines with nothing to worry about this week, essentially. And so you see CGC giving us the daily tightening range. Again, we anticipated this was the most likely scenario as soon as we saw the consolidation retracement size. We got our higher low, we got our lower high, and now we're tightening up as the volume continues to decline. Again, it's not a crystal ball. You just see the thing happen 10,000 times in the last decade, and you anticipate it's the most likely scenario. Some of the times it won't be, but more often than not it will be. And so now the question is, can the bulls hold 104 and keep this tightening range going through the week? ACB set the daily lower high. So high, higher low, lower high. Bulls must hold 727. They have a lot more space to do so. But again, just watching for tightening daily ranges for at least a number more days. TLRY, we've been highlighting how weak it is, and it's a lead bear. Short report came out today. Clearly, bears getting into their positions pre-short report was a factor in the relative weakness. But again, here's TLRY trading back at levels right when the news hit. And so TLRY is weak in a clear daily downtrend. And it's also going to be at risk of a weekly head and shoulders eventually. But all I care about is the hourly and the daily downtrend right now, as the bears have a lot of space to form an hourly lower high next bounce and a daily lower high next bounce. So right now it is the weakest cannabis name that I'm keeping an eye on. Great follow through for the bears today. So that's pretty much what we're watching in the cannabis space. Tightening daily ranges on CGC and ACB, likely to break later this week, and MSOS trying to keep that daily uptrend alive. Semiconductors had a gap down open into a bounce today. NVDA was crushed on the short-term time frames. We gapped down and then had a 1-minute flush down to 420 into a significant bounce. And again, another example of gap ups for selling, gap downs for buying, generally speaking, certainly not every time, but when you're opening the morning and your 15-minute RSI is approaching single digits or in single digits, and the 5-minute RSI is down in the teens, and the hourly RSI was in the low teens, and you're gapping down, you know a bounce is not that far away. So same thing as SPY and QQQ, but more space to work with. Can the bulls confirm the hourly uptrend tomorrow? Lots of space for an hourly higher low to form. And bigger picture, we're going to be looking at the weekly trying to maintain the uptrend, and the NVDA, if we do bounce from here, possibility of a weekly head and shoulders. But all I care about right now is the hourly and the daily chart. And we did fill this gap back here, so bulls trying to bounce a bit. Tesla finally rolled over into daily consolidation. We had a stair-step pattern with a higher low every day, 6 days in a row. That has broken, but we've also still got a lot of space for a daily higher low to form. Bulls ideally want to hold 260 to prevent from filling this gap, at least initially, and to keep this consolidation healthy. It definitely had relative weakness today. It was a weak hourly bounce, potentially an hourly bear flag as we head into tomorrow. And I'm just patiently waiting for a new support level to be established to then walk up my stop on my long swing position from August 18th. But no clear support established just yet. Financial sector, it's a potential daily bull flag. We had a stair-step pattern, higher low every day for 7 days. It broke, but we just had the second highest close in over a month. So again, we won't see fear in the broader market unless the financial sector rolls over convincingly. And that's something I have to see happen for the S&P 500 to confirm a weekly downtrend. If the financial sector stays strong, we're not going to get those weekly downtrends. So again, that's one of the checklists. And the other one was Apple. Apple needs to confirm this weekly downtrend if the NASDAQ has a chance at confirming its own weekly downtrend. And the Apple bulls showed up today to try and defend and form a tightening weekly range. But healthcare strong, or I should say the financial sector, still strong at this point. I'm short KRE from a swing position, top fish. They had a dividend distribution today, so that adjusts the price a little bit, but I need to see a bear break of 42.11 to follow through from that short. And the reason for shorting was the monthly lower high, inside bar bear break, and then clearly just identifying someone is defending $44. And so saying, all right, I'll play off that level too. I didn't do much trading today, pretty much just had a break-even stop out, attempting to find the top of the NVDA bounce. And again, I'm being very patient while we wait for the FOMC reaction. IWM is on the verge of confirming a weekly head and shoulders, less than 0.5% away from breaking 181.61. That would be significant. If that support breaks, we zoom out to the monthly. We watch the tightening monthly range that's been forming for over a year. We'll look for a monthly higher low to try and form compared to 167. But the bears still have a little bit of work to do there. We know IWM has clearly been weaker for the last couple of weeks. LAC is a name, Lithium name. Again, it broke this weekly falling wedge bullish with some news about the lithium discovery. And so now we're watching for a daily higher low. There's a few names where I'm scouting a daily higher low entry. LAC is one of them, keeping an eye out for hourly oversold conditions. If we see another red day tomorrow, hourly oversold will be approaching Lots of space for a daily higher low. And the other one is the uranium names. Started daily consolidation today, but trying to form a bull flag. Very minimal pullback. Didn't get close to hourly oversold there. So we'll see if the financial sector is a bull flag, and if these uranium names, CCJ, URA, both trying to shape up bull flags after the breakout from last week. Dollar daily consolidation underway. Anything above 104.42 is a higher low. But I'm starting to like the metal's relative strength because the dollar is hitting the lowest levels in 2 days, while gold just hit the highest level in over a week. Gold just V-shaped bounced. Its weekly higher low is set, and gold is attempting to shape up the first weekly uptrend since we topped out at the all-time high triple top. And so if we confirm this weekly uptrend on gold, it's going to keep the monthly cup and handle possible. So definitely paying close attention. Silver, beautiful bounce off its weekly support again. Just a crystal clear tightening range. Could easily stay within this a good bit through October. Bulls definitely want some help from the FOMC reaction. The miners gave us relative strength for the first time in a while the past couple of days. You can see we're testing weekly resistance while gold and silver are not. The miners led the way down. They're trying to lead the way up. That's another tally in the bull column for the metals right now. The only thing missing is dollar weakness. If the dollar starts weekly consolidation for the first real time since this bounce got going, give me 2 or 3 red weeks, and the metals will likely start to position real well, but that's still missing. The metal bulls are still swinging against the current of the dollar right now. So we'll see if that changes on the FOMC reaction Wednesday. Oil still just all bulls. 4-hour uptrend and no stop in the bulls at this point. RSI out the window to a certain degree. The RSI on the daily tells us we don't want to be making any long entries right now, but there's nothing saying that it's a top forming here. There was a rising wedge I was keeping an eye on. That broke bull. So all bulls in oil still at this point. The energy sector is still clearly weaker. It's being held up by oil strength, but I mean, the energy sector hasn't really given us a convincing bull break in over a week. And you look at what oil has done in the last week, and it has convincingly, 4 or 5% higher. So if I'm looking bearish on oil, I might want to be focusing on the energy sector instead, which has that relative weakness comparatively already. Natural gas gave us that 2-day equilibrium and tightening range. The bulls are trying for a quick higher low. They've got to break 282 and 287 for that bull break to take place. And I filled up my natural gas, my propane last week, so I'm A-okay with the bull break taking place. I filled it up here, and now I filled it down here. Let's see if that triggers a cycle shift like it did last time. I bought the top, now let's see if I bought the bottom. All right, that's where we stand into tomorrow. We'll go over a lot more on the pre-market stream as we watch what the setups are tomorrow, pre-market. And other than that, patiently waiting for the FOMC reaction, watching the metal longs closely along with uranium. Don't forget to do good things. Been seeing a lot of music recently. Saw, who did I see? Beats Antique last night. This video at the end here is STS9. This weekend I'm going to a music festival in the Caverns in Tennessee. It's inside a cave. Pretty sweet venue. I've never been. I'm excited to check it out. And there's a chill in the air.